Welcome to Money Mitch. What up? What up? What up? What up? How we doing out there, my Zinger Nation? Zinger Nation, welcome. I'm Money Mitch. If you guys want to give me a follow, look me up on Twitter, Story Investors. And today we're going to be talking about NFTs. We're going to be going into earnings. We're going to be going into bets. We're going to be doing it all. As you guys know, I'm Money Mitch, and I'm here to give you guys the story stocks. The bull market has taken control and is not looking back, guys. There's always an opportunity out there, and Money Mitch is here to help you find it. All right, guys, so let's go ahead and cue that first trailer, and we'll get into the market sentiment of the day.
I tell all my CEOs, this is a very, very, very important platform. And look, all the other platforms are important too, but you're up there now. You're way up there.
Best investments you can do in your future is actually go and re-educate yourself on credible sites, incredible resources like Benzinga. I think you guys have been killing it.
The comment section on this show is remarkable. Like the quality of the combo, and just big shout out to you and your community.
So I love about you guys, you just had all your callers in right then. And it's all about the community here at Benzinga.
What up, traders? We're back. And now let's go ahead and talk about how we can do that opening of the NFTs. Before I get into the market behind me, I want to talk about the NFTs, and we're going to get to the NFTs if we get to our like goal of the day. As you guys see, we need to get some more people in here. So do me a favor, hit the share button right now, guys. Hit that Twitter. Go ahead and tweet it out. You don't got to do anything. Once you hit Twitter, it'll give you the title and everything, guys. So put this out there. Let's get some people in here. Let's go ahead. Let's get the crowds going so that we can get to that 250 like goal so that I can open some NFTs for you guys right here live. I got a couple packs. I haven't seen them at all. So you guys will be the first, just like I will, to see these cards. All right, guys. So let's go ahead and let's get into the Money Mitch time, where we actually talk about the market here. And so one of the things I want to tell you guys is the market did a little bit better today, and one thing I always say, guys, and we guys know, we know, right? Buy the dip works again. Buy the dip, it works again. It's countless times, guys. I mean, I can't tell you enough, but that's just what it is. And if we look here at the market, we're going to notice that we're starting to get up towards the levels that we rejected from. There's the Harmy at the top there, and that's really what's important is when we got that turnaround, are we going to break out of this trend channel? We've been stuck in this trend channel for a long time now, and we really need to see if we can break out of it. And so one of the things that we saw today, we saw strong moves in stocks like Norwegian Cruise Line, and also it got a upgrade from Goldman Sachs. So definitely that's looking great. And if you look at some other reopening plays, you can see that we had a great day. Really, the stocks that did well were the economic recovery stocks, the ones that are coming back with our economics and getting that reopening play. So that's what we're going to watch in the overall market. But like always, guys, smash the like button if you enjoy me going over the overall market and talking about this, and hit the subscribe bell below if you want to watch some more Money Mitch content. And like always, guys, if you guys can do me the favor, let everyone know about the show. Brand new show, so I need you guys out there to help me keep it going. Let's go ahead and run the next trailer, and then we're going to be going into our interview today with BETZ CEO. And I know that you guys are going to enjoy this. Can't wait to get into it. Actually, you know what? Let me hold off on that one. We need some more people for that interview. Let's go into the earnings. I know that you guys saw some Netflix earnings, some Chipotle earnings out there. Let's get into these earnings. Play the trailer. All right, guys, and we're back. We're back. Let's get into some earnings of the week. You know, recently we talked on Monday. We talked about Netflix, man, and we kind of even mentioned this. We talked about how they could have some content concerns. You know, they gained so many subscribers during the pandemic, but we talked about the production, and I was interested in listening to that in the call. And guess what? That was the most important part of the call. That's why I gave you guys that information on Monday. So you guys got to stick with Money Mitch so that you guys can get this information. And then when you hear it in the call, you guys already know that's the catalyst to watch out for. Do they get the originals back? That's really good. It's going to be a big part of Netflix. You know, we believe that, you know, the CEO said that we believe that paid membership growth is slow due to the big COVID-19 pull forward in 2020 and lighter content slate. It's that lighter content. They don't have the content to come out that fast. But just to note, the company's revenue still grew over 24% year over year. So it's really not looking bad in that sense. And so let's go ahead and let's take a look at maybe, you know, another stock here. So Chipotle, guys. What can I say about Chipotle? A big old Tiger Woods fist thump. If you got that one, if you got it, hey, great earnings there. They smashed their earnings estimates as online sales overtook in-person orders. This is a company that knows how to do the pandemic. And I got to give it up to Chipotle. I've always wondered how the heck their stock price is so expensive, but man, oh man, if you look at their revisions and how they keep beating estimates, keep beating the orders, and look at that, changing up their business strategy here to beating their in-person orders with online sales. I mean, that's definitely impressive here. All right, guys. So the next one we're going to take a look at is, of course, what are we looking forward to the week? What's next? You know, I gave you guys some great information on Monday, and now we got to keep moving forward. So let's keep looking forward. What else do we have to look at? All right, so tomorrow morning, we're going to be getting Southwest, of course, Southwest and American Airlines. I'm going to be honest, guys. If there was any airlines that I was scared about American Airlines. I was worried that they were going to go bankrupt, but that's not what happened here, right? And so we're getting the turnaround. Now I need to hear from these companies, how are we getting reservations coming back? Is it a spike? How's the international look? Because I know the domestic look is looking better, but as we heard from United on Monday, the international look is not looking that great. And so let's go ahead and take a look here. What else do we got to look forward towards the week? Alaska Airlines at the bottom on Thursday at the open. But of course, after the close tomorrow, I'm loving it. WWE and the Undertaker NFT. I don't know about you guys, but I know who the Undertaker is. And if he's rising from the dead with the NFTs, I need to keep an eye out on WWE and this Undertaker NFT and what else is to come from the NFT game. So if you guys didn't know, that's why you guys see the scrolling line at the bottom. Let's get to that like goal. We need to get some more people in here. I mean, I want to open some NFTs today, but I ain't going to open it if we don't get some more people in here. So do me the favor, hit that share button. If everybody does it, I definitely will see it out there on Twitter. Tag me at Story Investors. And if I see at least, let's say, 50 people tagging me, that'll be enough also to hit the goal down below, and we get to open some NFTs. But before we kind of move away from the earnings, the last one I want to point out is Mattel. Mattel is going to be interesting after the close. If you know Barbie, Thomas and Friends, Fisher Price, Hot Wheels, I mean, you got to know these brands. And so that's what you got under Mattel's belt. And one of the things that I'm wondering is, do you hear talks of NFTs in their earnings? Could this be? Could they get into the NFT game? I think they have a chance. They got a lot of licenses under their belt. And so we're going to go ahead and see if Mattel can go ahead and talk about NFTs in their earnings. All right, guys, let's go ahead up and smash that like button. As we get into Friday, we'll be looking at Honeywell. Honeywell definitely standing out. And Slumberger, the burger. Well, definitely we'll be looking at Honeywell as we've been looking at industrial stocks and kind of what's going to happen with the Biden bill. Let's see what happens, and really that's what's going to affect Honeywell, I think, over time. I think that's why you're seeing the bulls jump in there. The stock has been rising up and it's been looking great. So the only thing is, how much further can it go? And I think that's what we're going to find out a lot on their earnings on Friday. All right, guys, that's going to do it for us on earnings. It looks like we're getting up there in likes. I only see 40 something. So we need to get some more people in here, but definitely enjoying you guys enjoying this. So let's get into the next trailer as we get into our interview with the CEO of BETZ, Will Hershey. This is also the co-founder of Roundhill Investments. And you guys are going to hear me talk about some sports betting. I know that I like to do a little sports betting on the weekends. I mean, what can I say? I'm a little bit of a degenerate gambler on the side on the weekends. And then on the weekdays, I do some strategic trading. So I know that you guys are probably like me and like to do a little gambling on the weekend and going to enjoy this interview. So cue that trailer and let's get into our interview of today. All right, guys, welcome back. Welcome back. In today's interview, we're going to be going in and taking a look at the Roundhill Sports Betting and iGaming ETF. We're talking ticker BETZ, BETZ, and really it's designed to offer investors exposure to sports betting and the iGaming industry. I have my interview. I'm ready to get into it. So go ahead, play that. All right, guys. All right. So here I'm joined by Will Hershey, CFA, co-founder and CEO of Roundhill Investments. This is the former head trader of Yorkville Capital Management, former analyst of Yorkville ETF Advisors, Mr. Commodore, or should I say Vanderbilt University graduate. How are we doing today, Will?
I'm doing well, Mitch. Thanks for having me on again.
Hey, happy to have you on. You know, one of the things is I always stick with the Roundhill's social team. You guys do a great job of posting up some catalyst, and I definitely stick with the reports that you guys put out. So I'm excited to get into today's questions. First things first, of course, you know, let's take an understanding of bets and some of the top holdings here. So, of course, you got major names like DraftKings and Penn, but I also see right down the list there a pretty good weight, 4%. Of RSI. Can you explain me a little bit more why you guys have Rush Street Interactive in as a part of the top 10 holdings?
Yeah, absolutely. And I think important for investors in any ETF to really kind of understand what's the methodology behind security selection and then security weighting. Really, the way that we kind of designed bets was first and foremost to provide exposure to online sports betting, and secondly to iGaming or kind of online casino, if you prefer to call it that. And in doing so, our kind of job as the managers of the index is really to provide that exposure, not so much kind of as you've seen with other truly active ETFs try and make single security calls. And really what we have is a screening methodology that kind of ranks in 3 tiers the companies within our universe. Rush Street, given that it's, fully iGaming based business, no brick and mortar business, although it does have kind of casinos that it can leverage as part of the broader Rivers brand. We have that categorized as a pure play company, so it slots in there as one of the top holdings alongside kind of the likes of Penn, DraftKings, and some non-U.S. names. So very important to understand that, although the U.S. Market is where all the excitement is right now with kind of the regulatory momentum we're seeing, there are interesting companies listed outside the U.S. like a Flutter, the parent company of FanDuel, so they do have that U.S. exposure. Kambi is another really interesting name that I like to point people to. That's kind of a behind-the-scenes type way to get exposure. So that's kind of how we have it developed and kind of slotted across a handful of different segments. You have the B2C sports books, the B2B operators like a Kambi that are licensing to the front-facing guys. Then we have some of the brick and mortar casinos that are moving more into the space, as well as iGaming focused companies and lead gen. So kind of all of that comes together in about 40 companies within the portfolio, all under one ticker.
Excellent, excellent. As you guys can see, the diversity in the ETF is definitely there. And I know you've been seeing it, Will. Recently, we have New York's Governor Cuomo signing the budget bill, which is going to be including, mobile sports betting into law. And of course, they've been talking about the 2 mobile platforms. Really, I have a question, of really what's going to happen here. And, Cuomo got what he wanted, but really I'm wondering, is there any companies that are set up to win in this process? And is there any one company that has more to gain and lose in this same situation?
No, Mitch, it's a great question. And, I think, we're all glad to see that New York's moving forward with mobile betting. On the other side of that, we do have, a few questions that are still left unanswered in terms of the way the final bill kind of made its way through the legislature. When we look at kind of the setup, there's talk of, as you mentioned, these 2 kind of what they're calling platform providers. On top of that, there'll be at least a minimum of 4 sportsbook operators or skins. And kind of when you look at the way that this process is being set up, with those kind of 2 primary providers paying $25 million license fees up front, on top of that another $5 million to casinos, it's going to be, and kind of the expectation here is that there's going to be a bidding war. So basically New York State said, whoever can come to us with the best deal, the best offer that's going to generate what they believe to be the most tax revenue for the state, that's who they're going to go with. And I think really what that ends up looking like in terms of who wins, I think it's going to be some combination of the biggest players in the space right now. That means DraftKings is in pole position. That means Flutter and FanDuel are in pole position, and kind of leveraging their balance sheets as a way to kind of get access to New York. I think is going to be what they're going to look to do. Now, it's unclear, for example, how like a Penn and Barstool is going to be able to get access into the state. Even though they have, kind of a skin deal, license deal in place to get access to the New York market, this kind of, new format that Cuomo put out and kind of that ended up making its way through, it's kind of unclear. That said, I think the expectation is New York is going to be, the biggest market once it's up and running. We still haven't seen anything yet anything formal anyway, from Florida, New York, from Florida, Texas, California. Those are the other kind of states in the big 4. But I think you have to look at DraftKings and FanDuel via Flutter as being in the pole position. It's hard to say, because if DraftKings wins one of those bids, are they going to let a competitor come on? I don't know. It's going to be very interesting to see how that shakes out. But there's definitely a lot of money at stake, even when you consider the taxes that are likely to come out.
Well, I know you're going to have a close eye on that, Will. And one of the things that it was interesting to me is I saw that New York law requires all digital bets to be placed inside a casino. Am I right with that?
No, it's exactly right. And what that ends up meaning, the biggest takeaway here is there's so many details in the law on a state-by-state basis. And, for investors in the space, it's really important to understand, are the companies that you're investing in, or be an ETF a little bit different, but are the companies you're investing in, how are they positioned in each state? Do they have brick and mortar casino partnerships? Do they actually own brick and mortar casinos like a Penn? And what does that mean on a state by state basis? But in the case of New York, you're absolutely right. That means that the physical servers that these sports books are operating from need to be located within one of the physical casinos in New York. Those licensing fees are going to be $5 million per year to the casinos. But once again, I mean, like these details are all very important on kind of a state by state basis. I guess the thought there is, if you're, one of these casinos that's been set up that has been making a push, maybe you get left out from one of the platform licenses, but you get a little bit of revenue in the door by licensing out your server room. I don't know. It's a funny setup.
Yeah, definitely. I have to agree. Definitely a funny one there. I that's probably the one thing that definitely stood out of all the things that I was reading. But one of the things that I've noticed recently, we got that NFL deal with DMYD's Genius Sports, or soon to be trading as Genie. And I'm going to be looking at that. I love the ticker name. I don't know who did that. I'm going to have to ask Nicolo who had the bright idea of naming it Genie. But how do you think Genius Sports will compare to the other data providers? And do you think they're really starting to separate themselves from the competition?
Yeah, no, it's a great question. I think it's really them, Genius and Sportradar are kind of, I don't want to call them a duopoly, but they kind of control the large majority of the sports data market. And I think they're going to be a really interesting kind of new name once they de-SPAC here. For investors to play. The U.S. sports betting rollout, as we've talked about, and I've been on the show before and talked about, we're really still in the kind of early innings. We just mentioned New York is a state that's coming online. You've got Maryland, Wyoming, like just many states that are rolling out. A large part of that is kind of coming from budget deficits they're seeing due to coronavirus. They've got to bring in tax revenues. Online sports betting makes so much sense there. And if you look at a company like Genius, they're really kind of these behind the scenes B2B type plays on the sector, where doesn't necessarily matter if it's FanDuel or DraftKings or Barstool or BetMGM in a given state. If you can kind of via long-term contracts and potentially have upside, which a lot of these contracts that Genius has tied to gross gaming revenue, it's a way to kind of play the overall story without betting on a single operator. And I think that's going to be interesting to kind of watch and play out. And the NFL deal, I think, caught a lot of investors by surprise. You saw the reaction to DMYD on the evening that it was announced, and I think in large part that was because the NFL owned equity in Sportradar, so it was kind of surprising to see them go that route. I think really, probably the deal from the NFL side was too good to pass up. But now that puts DMYD in a pole position. The NFL is definitely, at least in U.S. markets, the most sought after and the most bet on kind of on a regular basis.
Yep. Well, hey, you mentioned it. Well, I'm glad you mentioned that the NFL, it seemed a little bit strange that they chose Genius over Sportradar, but we'll have to take a look how that really pans out. One of the things that I always learned was look for the underlying asset. And to me, really, when you look at sports betting, I look at the sports data as being that underlying asset. So I'm definitely going to keep my eye out on Genius Sports. I got two more for you here. One that I think you definitely know about, the NFL announcing the first ever U.S. sportsbook partnerships. You got companies like FanDuel included, Caesars Entertainment, and also DraftKings. But what I thought was really interesting is, Flutter Entertainment's thinking about the IPO right now. And a lot of people are looking at FanDuel. So one of the things that I noticed was that FanDuel now is going to have access to bringing these integrations inside of their platform. So how do you think this is really going to affect, let's say, FanDuel first, and then we'll go a little bit into Caesars and DraftKings?
Yeah, I mean, I think I haven't had a chance to fully digest all of the details here. But I think that, what we've seen is the NFL has had partnerships before outside of the U.S. This is not new. The other kind of big four leagues do have, partnerships built out on the sports betting side. I think like I don't even know how much it means at the operator level, as much as, this is like the last major milestone in terms of mainstream acceptance of sports betting by, the biggest and baddest league in the US. And coming back to what you mentioned with Flutter and FanDuel, not to digress here, but I do think that's a really interesting story that we'll see if they are able to spin out FanDuel out of the kind of broader Flutter group onto a US exchange. That's something that's been floated by investors. I personally think if they're able to figure it out structurally, there's some complicated elements there, especially including the kind of Fox option to increase their stake in FanDuel. But if they're able to figure it out, if you look at, FanDuel is bigger than DraftKings in terms of revenues, in terms of user base right now. And what kind of value could that unlock for Flutter shareholders if they're able to spin it out? That's something, I think, they would be kind of foolish not to take a closer look at. We've heard that they are looking at it. And then now it's just a question of the devil in the details. How can they actually make that happen? But I think that also points to one thing, bringing it back to the ETF real quick, is, these European operators, in the case of Flutter, UK-based parent company, that has these assets that are more mature, that are producing cash flow, gives us a glimpse as to what the future might hold for a mature U.S. sports betting and iGaming market, but also highlights that there are different ways of playing this, and very different kind of valuation multiples that are being assigned to non-U.S. companies in the space versus the U.S. companies. When you look at our ETF, it kind of combines all of those into one.
Yeah, and one of the things that I'm seeing right there is this show is really all about story, and there's definitely a story there in FanDuel, so we'll definitely keep an eye on that one for the show. The last question I have really is, so recently, we saw Fubo really start dipping a little bit into, sports betting features. We've been seeing streaming companies really start talking about betting, and one of the recent kind of companies that I've been looking at and wondering what's going to happen here is, I don't know if you noticed, but and just to talk about it, is Sinclair and the casino operator with Bally Corporation. I do see Bally Corporation in the ETF, but one thing I noticed was the sports network and also the potential for eventually upstake in Bally Corporation. So how do you think kind of we're seeing these streaming plays? Do you think we're going to have some more streaming actually open sports books, or actually get that partnership to really start taking advantage of the sports betting and mixing the media with the platforms?
No, it's a great question, Mitch. And I think we've started to see these deals even going back a couple of years. So you had NBC, which owns a stake in PointsBet, an Aussie sportsbook operator that we own in the ETF. They own about a 4.9% stake. Fox has this position to increase their stake in FanDuel, and more of these kind of media partnerships. In some cases, as I just mentioned, via equity ownership in the actual sports books, are starting to take place. But the really high level takeaway here, and Barstool and Penn is the perfect example. If you can own that top of funnel, whether that's a streaming relationship or whether that's a Barstool type media, whatever you want to call Barstool, if these sports books can find ways to kind of improve their customer acquisition cost and bring that down by owning the top of the funnel, by owning these media assets, I think it makes a ton of sense. And when you look at kind of the way that the world's heading, we're going to see more and more integrations into broadcasts like never before, where sports betting lines and totals are kind of throughout the broadcast. That was so taboo to even talk about a couple years ago. You'd be lucky if you saw Al Michaels kind of slip in something towards the end of the game. That is all changing really, really quickly. And I think you might be onto something. Like, if you can just kind of imagine a world where live betting is improved to the point where you can really kind of place bets while you're watching a stream, almost real time on what's going to happen in the next play or pitch or whatever, that there's a real opportunity for streaming kind of companies to get involved. And, I think this all comes back to the highest level reason why we're bullish on sports betting, which is younger generations, they want to be involved. They want action. They want excitement. That's why MLB is kind of struggling with younger generations in terms of, keeping their attention. Can sports betting kind of be that silver bullet to bring, younger generations who are used to gaming and other forms of entertainment, back into live sports and what that could mean for streaming. I think you're totally onto something. It's just the one caveat I would say is if any of these players make a move fully into sports betting and they go above 5% ownership, they do become regulated. So it is a very big kind of decision for these players to make, but they're set up for it. And the writing's on the wall that you've got to be involved in sports betting if you want to go after this younger demographic. So I think that'll be definitely something to watch moving forward.
Yeah, definitely. I think you and I both are definitely going to be interested in seeing also how Fubo really transitions. They've been talking about it, but let's see what kind of features really come out in this next couple of months and in the next quarter. The last thing off I'd leave you with, of course, is more just an overall. How do you think 2021 ends with sports betting? How do you see it? Do you see maybe how many states do we get legal? Another question, maybe how do you feel about it being bullish overall? I know the NFL is going to come back roaring this year. Do you think we'll get fans in the stands? That's another question. I think it'll be interesting. I can't wait to see a Las Vegas Raider game maybe and seeing some fans betting right there in the stands. So it's going to be interesting. What do you think for 2021 sports betting?
Yeah, no, I mean, I think it's hard to put an exact number in the number of states. We're seeing it's all moving very, very quickly, though. And, states like New York that we're seeing as, long shots are making their way through. And now you're hearing, Texas is coming back to top of mind. Even Florida, we're starting to hear some rumblings. So I think the biggest thing to kind of look at for 2021 is how many of those states are actually going to be able to push the legislation through. How many of them are actually able to put online casino and iGaming legislation through, because that's been a whole lot trickier. But at the same time, we've seen that's been more revenue generative for the states that have been able to get that up and running, and profitable for the operators as well. Canada is going to be another one we haven't even talked about outside the U.S., but Canada has kind of everything in place to potentially legalize single event sports betting this year. That would be another big catalyst. And then outside the U.S., Brazil, we're starting to see kind of have momentum as well, potentially even India. In terms of if fans returning to the stadiums, we're starting to see it, right? Even here in New York, you can go, if you show a negative COVID test, you can go to the Garden. I think we're getting there. My gut says we're probably not back to full capacity in all the states until probably 2022, but that's going to bring renewed excitement for the space. And, I think really it's really a simple story right now. It's what states are getting up and running. And then if you want to go to a more micro level, which operators are winning on a state-by-state basis. Right now, it feels like it's the big four and everyone else, but that's going to change on a state-by-state basis. So not sure about when fans come back, but, this is going to be gradual, but happening quicker than I think a lot of people thought in terms of new states coming online. Sports media really embracing betting in kind of broadcast that we talked about. And then from a technology standpoint, what does live betting look like? How does that kind of evolve? And I think all in all, we're obviously bullish on the space. A lot of these stocks have had a great run over the past year or so. But I think that, what we're going to see is, I think a lot of people are expecting that, return to normal means less or potentially slower growth in online sports betting, maybe, but that's going to be well over compensated for in terms of the new states coming online. We're already seeing the, almost $1 billion handle months out of New Jersey. People want to bet on sports. It's fun. And that's not going anywhere. That's, we are in the early innings there. No doubt about it.
Well, definitely. I know I'll definitely be keeping up with the sports market as I'm in Colorado and can do my own little gambling. I do like the points bets mentioned. That one's the most interesting way of wagering. But really, guys, you guys will see it. BETZ ETF. I think it's at a great pullback right now. We're seeing some of the big names like DraftKings and Penn pulling back. So thank you for joining us. Will Hershey's the co-founder and CEO, guys, here of Roundhill Investments. I appreciate it, Will, and will always stay with you on social. You guys can find his link in the description below. And like always, Will, I appreciate you coming on, and we'll have you back on Money Mitch, and we'll be looking forward to seeing your growth.
Let's do it, man. Thanks, Mitch.
Appreciate it. All right, guys, you guys heard it first on Money Mitch.
Get winning options trades from Benzinga's top option trading expert, Nick Shaheen.
I don't risk money I can't afford to lose. Clearly, conviction is medium, probably at best here, because I'm swinging. I don't have a particular trigger, so it's not like it's gambling. We did homework. We showed fundamental reasons, so it's not like betting. I hope it's red. I hope it's black.
If you're looking to uncover winning options trades, the Benzinga Options Starter newsletter provides you with 2 fully researched trades per month. Each comes with a detailed video, ideal price and expiration date, and profit loss charts to accelerate your learning. If you're ready for high conviction, learn while you earn and subscribe now to Benzinga's Starter Option newsletter.
All right, traders, how we doing? I'm back here. And if you enjoyed that interview, definitely smash the like. I always appreciate Will's advice. And one of the things is, if you don't follow Roundhill Investments, I definitely recommend that. They put out some great social tweets for some great information on the BETZ ETF. Also, you get all their information. Roundhill Investments doesn't only do BETZ ETF. They have other ETFs, SUBZ. They have Deep. They even have a new one called MVP. So check it out, guys. That's Roundhill Investments. And look, guys. Look what's over my shoulders, guys. Are we gonna do this? Guys? Could it be? Are we gonna open some Topps MLB packs? As you guys see, no packs selected there, but I sure as heck got some. I can select them there. But before we do that, we need to see the likes jump up here. I'm seeing about 70. Can we get to 100 here? Smash the like for Money Mitch here. And it's going to be interesting, guys, because I definitely want to open this up. I was like a little kid earlier today. If you guys missed it on SPAX Attack, Chris Ketchy opened up a premium pack. So definitely after you're done watching Money Mitch, check out SPAX Attack. We went over a premium pack, and there was even a super rare included. And so let's get into what the rareables come. And so for the standard pack, the pack that I got, guys, 78% are going to be common, 16% uncommon, 4.1% are going to be rare collectibles. And even further down, you got super rares at 0.8 and 0.22. Let's see if we could get a rare or a super rare collectible here. But I want to see those likes jump. I'm seeing it go up there. But we got 77. We got 159 people at least watching here. So if you want to see me open this pack right now, hit the like button and let's get this going here. I want to see it. Brad needs to cook some dinner. I need to open some packs, and we need to hit the like button. Let's go ahead, guys. So if you guys don't understand what these packs are, these are NFTs, guys. And so great mention by Internet Enforcer explaining what the top packs are. And really, why is it important, guys? Because this is actually now a public company. And one of the things that's being mentioned is that when you go ahead and purchase these, right? After, you can go into that top spot where it says the marketplace, right? And then you can go ahead and trade these. Some of these packs, I could sell this pack right now and make a profit. Right now, I don't even need to open it. I could go on the marketplace and sell the pack and make money right now. So are they baseball cards? Yes, they are baseball cards. These are the MLB ones. And so it's NFT digital cards here. And one of the craziest things to notice is that MUDS, MUDS, that's the ticker, guys, that it's merging with on the marketplace. If you go and you do that transaction, you're actually giving this company royalties. They make a commission off of each transaction. So essentially, a royalty for life. They got a royalty for life deal here, guys. And I think, NFTs are definitely here to stay. It was something that was mentioned by Gary Vee on my interview. And if you guys didn't catch that one, you guys definitely got to go back and catch that interview. But like he said, NFTs are here to stay, and we got the packs here to prove it. All right, guys, I see 83. Can we get a couple more? Two more likes, and I'll open this up for you guys. Like always, guys, so hit the subscribe so you get to know when I got a new video. And if you guys don't know, I do put out videos on Benzinga Clips. Benzinga Clips is our small form content, guys. Definitely check that out. If you're a TikTok fan, Instagram fan, you like the short stuff, check out Benzinga Clips, guys. All right, so what's MUDS SPAC with? Exactly what you just mentioned, Dan. All right, let's go ahead and let's get into this and open it up, guys. I'm seeing 86. Let's do this. All right, so I'm gonna get this going here. So what you got to do is you got to select a pack. Let's go ahead and select one right here and open one. So hit that like button. Let's get this going. Let's see what we get. Oh, it wants me to log in again. This is what you got to do, guys. This is what you got to do. You got to have the Wax account. Wax account. Good thing Google doesn't let you see my password here. Let's get in. Boom, boom. That a baby. Let's go ahead. Let's check out this pack here. Dun, 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 dun. Dun, 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 dun. Whoa, 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 whoa. Whoa. Here we are, guys. Here we are. We got the opening pack here, the first lineup. Look at that on the first one. We got an uncommon there. Uncommon. So first up, we got Gene Segura. We got Garcia, and an uncommon here, Brandon Nemo. Oh, that looks gold. I like that. I like that. Austin Riley. Let's go down. Let's see what else we got here. All right, so we also got a Mookie Betts World Series card. It's a common, but one of the things to mention, guys, is, and I don't know if you guys know this, but the company is actually doing a process called a burn. And so what are burns, right? And so one of the things that happens with NFTs is that we really want to limit the amount of these cards that get out, these amount of digital collectibles that get out, right? And so one of the ways that we can limit is we can burn these commons. So essentially giving the card up for no value, but what that does is that keeps the value higher in, let's say, our super rares, our uncommons, and it's going to help even just keep the common price up. So I thought that was a really interesting factor that the company introduced. So definitely, if you enjoyed that, give me a thumbs up, guys. I could have sold this pack. Look, the pack wasn't even that expensive, guys. The pack was about like $6. But right now, I could already make about like $40 on this pack itself. And maybe I'm going to check out the value in that Brandon card that we see up here. And I'm going to take a look at it to see how much the value is. I got to go to the marketplace so I can see if maybe I made my money back on just one card. But that's what I want to check it out, guys. And I'm going to definitely open another 2 packs tomorrow as we keep building up. I know we didn't hit the goal today of 250 likes, but I wanted to at least give you guys some of the NFTs. So if you enjoyed that, let me know in the comments below, and then I'll keep opening some more. And who knows, buying some more. Money Mitch, you guys. Let's go ahead. Cue that next trailer.
When you want to maximize your performance in the market, you need access to the highest quality tools and news available. Benzinga Pro stands out from all of the options you'll be presented with, and their instant access to market-moving news positions you to be prepared to take on the market in the best ways possible. Here's how it works. Benzinga Pro's news desk creates original news content that's available on your main news feed and gives you actionable information about companies you may want to invest in. This news desk information gives you the chance to beat the market, receive impactful news as it breaks, and jump on trending stocks before and as they rise. And beyond that, Benzinga Pro is packed with helpful features and unique insights that give you the best information possible. There's tools like the Live Audio Squawk, which streams every day with important news and timely updates, and the real-time news alerts that allow you to stay on top of every developing story you're keeping tabs on. Alerts and news will be sent straight to your inbox or delivered as live sound alerts. For those investors that want real-time, actionable, and breaking news about companies they may be looking to invest in, Benzinga Pro is the tool to use.
All right, guys, and we're back. We are back. I know you guys enjoyed that just like I enjoyed it. And I'm seeing in the chat here, a lot of people loving it, giving me some love. This is exactly what I want to see. Give me the feedback, guys, in the comments after the show. Let me know what you guys want to see on the show, what you guys want to see more of, what you want to see less of. If you don't like earnings, I understand that. Sometimes I don't pay attention to them either. It's normal, guys. But here on Money Mitch, it's all about the story stocks. That's what I'm really about, guys. If you guys know me, my Twitter at Story Investor. And if you could do me a favor, there you go. My man, Enver, producer Enver, killing it in the back today. I got to give him a shout out in the show. So much love to Enver. He helps me out almost every single day. So if you guys could give him a shout out, even in the chat, I'd love to see that. But definitely, guys, hit me up, guys. So you guys see it right here, Story Investors. And what I talk about is the story stock approach. Some of my early stock picks this year, guys, would include right at the end of the year, I included GAN. Then I looked at PLL, a lithium stock that went through the moon. I've played Overstock. And what it all comes down to is the 3 variable approach, guys. It's not just one. It's not just 2. It's 3 variables. What are the 3 variables? We got story, fundamentals, and technicals, guys. That's what it really comes down to. So now I'm going to take you in here, guys, to some Google Analytics here. This is what I do, guys. I start looking at macro trends, social trends, and I move down to the particular stock. So first things first, how do we approach this? Is we want to go in Google Trends, and you just want to just think about what do you think is coming up? What's coming with seasonality? What's coming with kind of that cyclical move, or maybe it's a reopening play. Guys, do your research. I can teach you guys here on Money Mitch. Let's keep going. Let's get into this, guys. So what you're seeing on the chart here and what you're going to see is Top Golf versus Golf Course. So this is a 12-month kind of chart here from April 26th to now. And as you're seeing after that January 17th time, kind of like when the winter started coming off, look at the rise in the golf course action and look at the rise in Top Golf. Now, what do these 2 plays have in common? And if you like to play some golf, go ahead and put a 1 in the chat so I can see that I'm not crazy and that some people are looking for some golf courses out there. So definitely put a 1 in the chat and we'll definitely see. But what do these 2 search terms have in common? They have in common one ticker, guys, one ticker. And that ticker is Eli. And Top Golf was actually a recent acquisition to Callaway Golf here. That's ticker ELY. And so that's why I'm bringing these up, because if they own Top Golf, right, and people want to get back out and they don't want to be indoors anymore, right? They want to go somewhere to maybe have a fun experience. They're going to look for some Top Golf. Get some revenue, right? Some people like to have a little drink when they do some long irons. Hey, that's where you're going to see it. And so another thing you're going to see is the golf course action is actually going to help that. So both are uptrending and both give me a sign that the story is right, guys. And the story that's what it's all about here, guys. On Money Mitch, I'm trying to get you guys the story. So the story is there. The fundamentals actually point to an upside because that indoor purchase of Top Golf wasn't like, let's say, last week. This was a while back now. And because of that, I think you're going to start seeing that revenue start showing up on the bottom line. And that's what we're going to keep an eye out for. So the technicals, you're going to start seeing that Eli is just getting off the support. And that's why I'm going to go ahead up and keep a close eye on this stock, because I want to see a close little pullback, and I'll take it. I'll take it, guys. Like we say on Money Mitch, we're going to go ahead up and hit a little 10 bagger on that. And the biggest thing that I look for, guys, is social trends. So if you're looking for those social trends, that's what you need to do, guys. You need to work your way, get that analytics, look for that macro, work backwards. Don't work forward. A lot of people look for stocks first. I look for the macro trend, the social trend, what is coming, and then I work my way into the micro analysis here. All right, guys, like you said, Mitch, to the moon, baby, to the moon, guys, to the moon. If I had a doggy or a Dogecoin right now, I'd pet it, but you know, we'll leave that one be. All right, let's go ahead and let's get into my next story stock, guys. I got a few minutes left with you guys. It's about 8 minutes left for the show here. Let's keep rolling through here. Let's get into the next one up here. Let me just go ahead up and click my PowerPoint so I can grab the next image here for you. And really, guys, I want to talk to you about pets. If you got a pet in the chat, definitely put the pet's name in there. Put the pet's name in there. I wanted to give a shout out to my pets, and I have a healer named Nala. I got a tabby cat named Hendrix, and of course my Bob Marley. You got to have some Marley in your life, so I got my pets, and I don't know about you guys, but I think you guys are like me, and you guys have been looking at doing a vacation. I need to do a vacation. I need to get out. I'm thinking about even doing a road trip, a long vacation. I work from home. Why not do a vacation? Why not work out of California or wherever I want to work? And that's what I want to go ahead and focus on, is enjoying life. But one of the things is, if I leave on a flight, I'm going to have to leave my pets with somebody. And I don't have the 30 friends to go to here in Colorado. So one of the things that I got to go to is I got to use a service. And so if you're looking to go ahead and look for dog boarding, then what are you going to choose? What is out there? And so that's why, guys, I'm going to go ahead and bring up here the next ticker, guys, which is going to be Rover. Rover is recently merging with Nebula Carnival Acquisition, guys. And so that's NEBC. And so let's take a look at the Google trend data and why this could be a potential play here. And so one of the things that you're seeing here is the blue, right? The blue is the dog boarding. And the blue shows you what? The blue shows you cyclicalness and how this play is to the cyclical. It always spikes right by June and July. Why, guys? Because we like to go on vacation in the summertime. And I can't blame you if you like to go on a vacation. I really can't. And so that's what you're seeing in those spikes. Now, you can see how Rover kind of follows those spikes and really sticks with it. And so this company does really well in the what? In the second quarter, guys, the second quarter of the year. And that's what I'm going to be on the lookout for. I think when you see their earnings, boom, they're going to kick it out the park. Because at the end of the day, guys, we got to leave our pets with somebody. And Rover is the leading company here. So I know that a lot of people want to say that SPACs are dead. I think this is one that you can look for a future investment in. And you're going to see a lot of people wanting to look for dog boarding. And when they look for dog boarding, you know they're going to have that advertisement set up on Google where Rover is that first one showing up there. You search dog boarding. You tell me what you find in the comments after the show. All right, guys. So one thing to mention before I get off of that Rover is that their revenue is actually expected to follow suit, guys. So in 2020, their revenue was $48 million in revenue. And now in 2021, it's predicted to be $97 million. And then following that in 2022, they predict all the way up to $201 million in revenue. Another thing to understand is that Rover handled more than 2 million transactions to date. This is not a company that just started. Rover's been around for a while. I don't know if you guys have used Rover, but I know I definitely have used it. And one thing that most people don't know about, and that's why I included Hendrix, and let me see if it will let me bring it back. The reason I included Hendrix, guys, is because at the end of the day, Hendrix is a cat. And do you know that Rover does boarding for cats too? Most people don't know that either. Most people don't know that, hey, if you got to leave your cat too, you got to hit up Rover. So that's what I'm definitely focused on. Look, I see it there. I see it. Can you do me a favor? I'll pull it up, Ember. No worries. Look at the comment here coming in here by Crew Cut. Rover ad, top result. You know it. That's what I look for, guys. That's the story right there, guys. You guys got to watch it out on the technicals. It's really cheap right now, guys. It's relatively cheap. And that's why it's definitely on my radar. Fundamentals definitely point to a cyclicalness in Q2 and the growth. You guys heard me mention some numbers. That doesn't look bad. And the last thing I'd leave off with is Rover is actually expected to be profitable by 2022. And so a lot of people down this company because of their debt. But if they're going to be profitable by 2022, it seems to me they understand their margins and understand that in the future, if they keep playing their game, the growth outlook that they have for the next couple of years should get them into profitability. So that's going to do it for our story stocks today. But like always, guys, definitely stick up with Money Mitch here, guys. Let's go ahead and cue one last trailer, and then we'll go ahead up and wrap up the show.
I tell all my CEOs, this is a very, very, very important platform. And look, all the other platforms are important too, but you're up there now. You're way up there.
Best investments you can do in your future is actually go and re-educate yourself on credible sites, incredible resources like Benzinga. You guys have been killing it.
The comment section on this show is remarkable. Like the quality of the combo, and just big shout out to you and your community.
So I love about you guys, you know, you just had all your callers in right then. And it's all about the community here at Benzinga.
All right, guys. I'm back. I'm wrapping up here. I hope you guys enjoyed the second episode here of Money Mitch. And if you guys enjoyed it, do me the favor, hit the share button. Let everyone know this is a fun show. This is not just about education. I'm going to have some fun. We're going to do a little dancing, whatever we need to do to enjoy the day. But definitely, guys, smash the like button. Look me up, guys, Story Investor on Twitter, and let's keep growing. Let's keep growing the story stock approach. The new investor out there needs to be informed, and I am not like the CNBCs out there. I'm not trying to call out the retail trader and tell them they're uninformed. I'm trying to let you guys know we have the power, we have the information, and with Money Mitch, I'm going to take you there, guys. I'll see you next time, guys, on Money Mitch. Definitely leave me some comments, leave me some feedback, how I can improve. I'm always trying to get better for you guys out there. And soon, guys, we're going to have a call in where I can go ahead and look at some technicals for you right here on the chart behind me. So like always, guys, I'll see you next time on Money Mitch.